Welcome to the Way to Build Wealth. I'm Ethan Block. That's Warren Buffett. And together, we're helping you build wealth. Welcome to the show on this glorious Wednesday. New president in the house. And let's get right into this show. So recently on the Way to Build Wealth, we've been talking about the 4-fund portfolio. And if you haven't checked that out, do yourself a favor and either stop this video now or watch it after. I'm going to link up the first episode on that right below. Now, the last episode we did, we talked about ways you can tweak the 4-fund portfolio. We call it the 4-fund plus one maybe portfolio. And one of the recommendations was to add a tips fund to your portfolio, or a Treasury inflation-protected securities fund. Now, we briefly talked about tips in past episodes, and I wanted to take this opportunity to dedicate a whole episode to helping you understand what a tips is. You know, we talked a lot about why you should own it, so I'll drill that home a bit more, and we'll talk about the easiest way to own it. So what a tips is like I said before, a Treasury inflation-protected security. More specifically, it's basically debt or a bond issued by the Treasury that's indexed to the rate of inflation, or in more technical terms, the CPI, the Consumer Price Index. Now what happens is, let's keep it simple. Let's say you buy $100 tips, $100 par value, and in this year, inflation's 3%. Next year, that $100 principal will be adjusted up to $103. Very simple. However, in this year, you would have gotten on top of that, a fixed rate of interest. Now, let's say the tips has a fixed rate of 10%. That's extremely high, but let's keep it simple for fun's reason. Fixed rate interest is 10%. On that additional initial $100, you would have got a $10 interest. You would have gotten $10 in interest. Now, next year, that fixed rate, it's still a fixed rate of 10%, you would get $13 in interest. And so on and so forth is how that works. Now, it can also work on the flip side. If there's deflation, and let's say that principal goes to $95, you would just get $9.50 in interest. Now, that's the mechanics of the tip security. But what's cool is, at the end of its life, or at its maturity, you either get one of two things: the inflation-adjusted amount, or the original principal you put in, whichever one is greater. And the reason they do that is to protect you from deflation. It's extremely cool. You're protected from inflation because you're indexed to the rate of inflation plus a little bit of interest, and you're completely protected from deflation because they're either going to pay you your original principal back or the inflation-adjusted amount, whichever is greater. That's how tips work. Now, the easiest way to own a tips is through a tips fund. You can buy them directly from the government through treasurydirect.gov, which is the government's own online brokerage account, which we've talked about. And we'll get into more detail on how to do that later on. But the easier way is through a fund. Now, all three brokerages, which we always recommend, offer inflation-protected funds: Charles Schwab, Vanguard, and Fidelity. And on top of that, we're linking up some sheets down below which break out the different tips offerings from all three brokerages. So be sure to use those to your advantage. I love these sheets. And finally, as we said before, I'm going to say it again, you want to hold your tips funds in a tax-deferred or tax-free brokerage account, meaning an IRA. The reason you want to do that, it's a bond fund. It's going to be paying interest at least twice per year, and you want to shield that interest from the tax man. Granted, you know, we got to pay taxes, country's got to run, but put them in your tax-deferred or tax-free IRA. Smartest way you can hold them. That's everything about tips. Gotten a lot of detail there, explained how to own them. You know, apply the allocation principle like we've talked about. We'll link up that episode down there, allocation of your 4-fund portfolio. Include the tips into your bond fund allocation estimates or calculations, whatever you want to call it. That's it for the day. I'm Ethan Block. That's Warren Buffett. And together, we're helping you build wealth.